Imagine you wake up one morning, check your investment account, and everything is just gone. Not because the market crashed, not because you made a bad trade, not because of some financial crisis you saw coming on the news, but because the government, your government, made a decision at 7 a.m. on a Tuesday, and by the time the stock market opened, your shares were worth zero.
And here's the part that should genuinely bother you. It was completely legal.
This isn't a conspiracy theory. This isn't a movie plot. This actually happened.
On September 7, 2008, the United States government seized control of two of the largest financial companies on planet Earth, Fannie Mae and Freddie Mac, and in doing so, wiped out roughly $600 billion in shareholder value almost overnight.
And almost nobody talks about it. So today, we're going to...
My name is Zach, and I spend way too much time thinking about how governments and institutions move money in ways that most people never see coming. If you're someone who's trying to build real wealth, but keeps feeling like the rules of the game are being changed without anyone telling you, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Because today's video isn't just a history lesson. It's a masterclass in understanding how power actually works in the financial system, and more importantly, how to protect yourself when it doesn't work in your favor.
Okay, let's go back to 2008. The U.S. housing market is in free fall. Home prices have been dropping for 2 years straight. Mortgage defaults are skyrocketing. Banks are terrified. And right in the middle of all of this are two companies you need to understand: Fannie Mae and Freddie Mac. They weren't just big. They were structurally essential to the entire American housing market. Between them, Fannie and Freddie owned or guaranteed roughly $5.4 trillion worth of mortgage-backed securities. That's trillion with a T.
To put that in perspective, that's nearly half of all the mortgages in the United States.
They were what economists call government-sponsored enterprises, or GSEs, meaning they were privately owned companies with private shareholders, traded on the stock exchange like any normal company, but with an implied backing from the federal government.
And that implied backing? That's where this whole story turns dark. Look, the business model of Fannie and Freddie was actually pretty straightforward. Banks would give people mortgages. Fannie and Freddie would buy those mortgages from the banks, package them up, and sell them to investors around the world as mortgage-backed securities.
This freed up cash for banks to make more loans, and it kept money flowing through the housing market. Simple enough, right? Here's the problem.
When housing prices were rising, this system worked beautifully. Defaults were low, securities were paying out, everyone was making money.
But when the housing bubble burst and home prices started falling 10%, 15%, 20% in some markets, those mortgage-backed securities became toxic.
The value of the underlying loans dropped. Defaults exploded. And suddenly, Fannie and Freddie were sitting on hundreds of billions of dollars in losses.
By the summer of 2008, both companies were technically insolvent, and the entire global financial system was watching. Now, you might be thinking, okay, companies fail all the time. That's capitalism, right? If the business model breaks, the company goes under. And under normal circumstances, you'd be right. But here's the thing. Fannie and Freddie weren't normal companies.
Foreign governments, China, Japan, sovereign wealth funds across the Middle East had purchased enormous amounts of Fannie and Freddie debt.
If these companies defaulted, it wouldn't just hurt American shareholders. It would send shockwaves through the global financial system and potentially destroy America's credibility as a safe place to invest. So on September 7, 2008, Treasury Secretary Hank Paulson announced that the U.S. government was placing both Fannie Mae and Freddie Mac into conservatorship.
In plain English, the government took over.
And here's where it gets really interesting.
When the government took control, they created a new class of securities called senior preferred stock. This new government-held stock would get paid first before any existing shareholders saw a single dollar. But that's not even the most controversial part.
Before the takeover, ordinary investors, pension funds, individual shareholders, small investors, retirees, held common and preferred shares in Fannie and Freddie.
Fannie Mae stock was trading around $7 a share just days before the announcement.
Freddie Mac was around $5 a share. The moment conservatorship was announced, Fannie dropped 90% in a single day. Freddie dropped 83%.
Gone. Practically overnight. Shareholders who had collectively held an estimated $600 billion in value across common and preferred shares watched that value essentially evaporate.
Not because of a market crash, not because of fraud, but because the government restructured the companies in a way that put existing shareholders at the very bottom of the priority list. Let's say you were a pension fund manager in 2007. You bought $10 million worth of Fannie Mae preferred shares, a conservative investment, by the way, because these were government-sponsored enterprises with an implied government guarantee. By September 9th, 2008, that $10 million was worth approximately $600,000, a 94% loss.
On what most investment managers considered one of the safest possible investments in the U.S. financial system. Now here's where it gets genuinely complicated. Was this theft? Was it illegal? Technically, no. The government had the legal authority under the Housing and Economic Recovery Act of 2008 to place these companies into conservatorship. Shareholders did sue multiple times for years.
In 2013, the Obama administration implemented what became known as the net worth sweep, a policy that redirected all of Fannie and Freddie's profits directly to the U.S. Treasury indefinitely.
Between 2013 and 2019, the government collected over $300 billion in profits from the two companies, while shareholders, who technically still owned their shares, received nothing.
Courts went back and forth on this for over a decade. Some ruled for the government, some against.
The Supreme Court ultimately weighed in 2021, ruling that while the structure of the FHFA was unconstitutional in one narrow way, shareholders largely did not win the relief they were looking for. The $600 billion was gone, and it stayed gone. Look, I don't want this to just be a story about 2008.
Because the real reason I'm telling you all of this is much more important than one historical event. There's a concept in behavioral finance called implied safety bias.
It's the psychological tendency to treat something as safe, not because you verified it is, but because it feels like it should be.
Because a respected institution backs it. Because the government is involved. Because everyone around you is doing it.
Fannie and Freddie shareholders weren't stupid people. They were pension fund managers, experienced investors, people who ran quantitative models and read balance sheets for a living.
But they were operating on an assumption that the implied government backing meant the government would protect them. And here's what most people don't realize about how governments actually work in financial crises. When governments have to choose between protecting systemic stability and protecting individual investors, they will choose systemic stability every single time, without exception.
And they should. But that means you as an individual investor are always the last priority.
That is not cynicism. That is just how the system works. And the sooner you internalize that, the better every single investment decision you make will be.
Okay, so what do you actually do with this information? 3 things. Write these down.
Number 1, never confuse government adjacent with government protected.
GSEs, quasi-public companies, government contractors, these entities carry a unique risk that most investors underestimate.
Before you invest in anything with government involvement, understand exactly what protections shareholders have, and more importantly, what protections they don't have.
Number 2, diversify across risk structures, not just asset classes. Most people think diversification means owning stocks and bonds, but Fannie and Freddie shareholders owned both common and preferred stock, 2 different asset classes, and both got wiped out simultaneously because they were exposed to the same structural risk. True diversification means thinking about what single event could take down multiple positions at once. Number 3, understand the priority stack of every investment you own.
In any investment, stocks, bonds, preferred shares, real estate, there is always a priority order for who gets paid first if things go wrong.
Secured creditors, unsecured creditors, preferred shareholders,
common shareholders. Know exactly where you sit on that stack before you put a single dollar in.
These aren't complicated steps, but I promise you 95% of retail investors have never once thought about any of them. Here's the thing about stories like Fannie and Freddie. They don't get told in personal finance class. They don't come up when someone is teaching you about index funds or compound interest. They exist in this uncomfortable space between finance, law, and political power, and most financial content creators just avoid it. But you need to know it, because the gap between investors who build real, lasting wealth and investors who get caught off guard isn't usually intelligence. It's not even effort. It's awareness. It's knowing how the system actually works versus how you wish it worked.
$600 billion evaporated in a single morning. Legal, documented, and almost completely forgotten.
Don't let the next version of that story catch you unprepared.
If this video gave you something to think about, hit that like button.
It genuinely helps this channel reach more people who need to hear this stuff. Subscribe if you haven't already, because we go deep on exactly these kinds of stories every single week.
And drop a comment below. I want to know, did you know about the Fannie and Freddie conservatorship before this video? Let me know.
I'll see you in the next one.